So it's all yours, Carmen.
Okay. Um, so wrapping up this week. Um, know we talked about a lot of stuff on our last Zoom call. After the fact. So, if you guys have any questions about that, or if you've thought about it, just let me know, and we'll just keep next week building on top of that. But one thing I wanted to go over tonight was watching and looking at market appreciation. So we're looking at the markets. We have to really be vigilant and appreciate the market appreciation and how the markets are moving and how we can benefit and capitalize off of the markets. And when I say markets, I'm not just talking about Forex. I'm not talking about, just the general broad currency market that includes the metals. I'm talking about all markets because at the end of the day, um, markets are everything. Everything is a big cycle. The housing market feeds into this, the Forex market feeds into it. Like it all feeds into each other. So learn to appreciate and anticipate the markets. So when the market appreciates, appreciate it, and then anticipate a downturn or reversal, and then appreciate the market movement and see it as an entry or see it as a point in time where you should really stop and think. That kind of sums up this whole week, not only for the housing market, for crypto, for the stock market and Forex markets. Like it's every market this week has um, either reached a new recent high or a new recent low. So those are always times and opportunities to stop, pause, look at the market, appreciate where it is, because at certain levels, either the market's going to appreciate, move higher, or you just have to appreciate the new high that it's hit, knowing that at some point it has to pull back because of profit taking. So I just want you guys to keep that in mind, when we're looking at crypto, especially going into the weekend. Bitcoin over this past week, hit 28,000, then it bounced up to 46, and now it's hovering around 34, 35. Like, kind of take all those things that I've told you earlier in the week and kind of, not kind of, just do it, put it all together, and really start to see these markets not only from a technical but also from a fundamental and a sentimental view. See what the market is showing you about people's emotions, because that's how people are really trading right now. People are trading with the thought process of, I could possibly have to go back to work. I don't want to go back to work. Let me see if I can find a way to not have to go back to work. People are trading with the sentiment and thought process of, um, believe it or not, I borrowed this money. I'm going to have to pay it back. And I need to make money in the markets to be able to pay this money back. Or those people who borrowed money hoping and wishing that they were going to make a quick flip and they got in at the wrong time. There are all these different emotions going on right now with money in the marketplace. So the example that I just made of the person who possibly borrowed money, I was looking at bank loans and when people took out loans versus when they were due. And a lot of people have loans that are going to be due this quarter, next quarter, and like going into like the Christmas holiday season. And a lot of those were more like the payday loan types, um, salary advance loans. So those were for people who were trying to get quick money and wanted a short-term payback. But then the interest rates for those are like super, super high. So I'll talk about that a little bit as well as we go over the Forex Factory calendar and I sum up the week there. So um, we started out the week with speeches. We had a lot of speeches on Monday. And then as the week went on, we had more speeches, but they were slightly more important than the ones that we had on Monday because they were geared more towards how countries and banks plan to move forward with inflation and out of the lull that COVID created for the economy. Wednesday, we got the ECB stability news, crude oil inventories, and our Fed minutes. We also got the employment news for Australia, and it was mixed. So while they didn't create as many jobs, actually, they didn't even get into the positive whenever it comes to the jobs that they created. They actually lost 30,000, almost 31,000 jobs in the market, but their unemployment rate went up. So think back to when I was telling you guys about why that could possibly be that the unemployment rate goes up, but an employment change might drop. So that could possibly be that you're getting people that switched from a temporary type job to something that was more permanent, or you could have a situation where try not to confuse you. I'll type it out because I already feel myself getting ready to mess up if I say it out loud. All right. So with Australia, we have to watch their economy. So I'm gonna go back to my original point that I was going to make about all this. We have to watch the Australian economy. We have to watch the Australian economy right now for several reasons. So gold. I mentioned gold after the recording on the Zoom call on Wednesday. Talked about gold production, copper production, those types of things. And then also with the UK opening, with trade conflict still kind of going on right now between the UK and some of the commonwealths that the UK has trade deals with. We just have to really watch their economy because they were doing so well, and for them to slip in their employment change and for them to also slip in their unemployment rate, we just have to watch like what these things mean and compare them. So the last time that they had their employment numbers come out, if you look to the far right, they actually created like 77,000 jobs, and then their unemployment rate ticked up a little bit. So it's trying to figure out what's going on with the benefits situation, because the only reason why these numbers wouldn't truly correlate the way that they're supposed to and match is because people are either going from part-time to full-time or full-time to part-time. And remember that governments don't count part-time or temporary people as truly employed people. Sorry, I'm on call and I have to keep my ringer on and my phone just keeps going off. So we have to watch and figure out what the benefit situation is like, because if benefits for the people who are working go away, then that means they're going to be more dependent upon the government. When people are more dependent upon the government, then that means that the government's going to have to print more money to actually sustain the people. So it's more of like printing out money for the equivalent here in the United States would either be like Social Security, Medicaid, Medicare, or SNAP/welfare benefits. So that's the reason why that's important right now. For yesterday, unemployment claims. So unemployment claims actually dropped here in the United States. That was good. We didn't have as many people in line for unemployment claims. On the flip side of that, we have to look at our next jobs number that comes out, not next week, but the week after that, to make sure that those aren't people who are just losing their benefits, because there are states that are cutting off unemployment benefits. Right now, we're going to see it as a good thing that there aren't that many people in line, because people who are not in the unemployment line are typically getting jobs or have a job. And then today we had a ton of Euro news. Euro just being the European continent itself. We actually had really good news come out for the GBP for their retail sales. Their retail sales were up month over month. Like it was almost double what the forecast was supposed to be. So that was really good. What that tells me is that people are actually getting out and people are spending money. So that's what we want to see. If we look back to yesterday, Australia also had some really good retail sales news. And retail sales news is going to show us that people are spending money, which means the economy is going to grow. Awesome news. And then flash manufacturing news was great for France. Manufacturing news was slightly off for Germany, but then the services news was good. So we just have to watch their manufacturing, see how much they're actually able to produce and get out of the German border. Overall, for the Euro, manufacturing and flash news was pretty okay. And then services news for the GBP was off, but their manufacturing news was good, which considering that they had been locked down like pretty tight up until recently, it doesn't surprise me that their services news was off because people weren't actually able to get out and truly participate in the face-to-face services that they typically would have if the economy was completely open. Canada had really good retail sales news, and then the United States had great flash manufacturing news. So that's a good thing. What that's telling me right now is that these economies are starting to grow. People are starting to get out and spend. So with that being said, just flashing forward to look at next week, we are going to really be anticipating this consumer confidence news. Definitely want to see how people feel about the economy, where things are going. And then we also have rate news coming out for the New Zealand dollar. I don't suspect that they're going to change their rate. What happens with rates is that most countries tend to follow the lead of the United States unless they just have something fundamentally wrong with their economy. Wednesday, we're definitely going to be looking at crude oil inventories just to make sure that companies are starting to stockpile their oil again, but then also make sure that production is good. So with crude oil inventories, you can pull up the report and actually see both of those things. So we just want to make sure production is good, but storage is also good as well. Preliminary GDP numbers on Thursday, as well as unemployment claims, is going to have the market super, super rocky right before the market open on Thursday. So if anything, I always tell you guys to try to make sure you're out of the market by Wednesday. Definitely make sure you're out of the market by Wednesday of next week, because next week is the week right before NFP. But then you also have this big economic news that's coming out at the second half of the week. So just go ahead and plan accordingly for that, because that preliminary GDP news, with inflation, it's really hard to tell what economic growth is truly happening, because the numbers will look inflated because of inflation. There's no way to truly tell what the real inflation rate is until the Fed tells you, because they have different ways of measuring it. So I can't even really and truly, I guess, predict or give a true analysis of what I think the preliminary GDP is. The hope would be that it grew, but with inflation, I don't know. But for right now, just being hopeful for our economy that it is growing, I will say that, I hope that it's better than forecast. Always for unemployment claims, the hope is that we have fewer unemployment claims, because that means that more people are going back to work. Pending home sales, where we've been talking about the housing market, correlating that with the financial market. We will be paying attention to this news, and it comes out 30 minutes after the market open. So definitely make sure that you're paying attention to that news, because we're going to correlate that with bank rates, inflation, and then also wages as we're getting ready to go into NFP in that following week. And then on Friday, We can look at the personal consumption expenditure price index. And we'll be looking at that news, tying that into inflation. So all of this news that we're getting right now is going to be tied into inflation. Personal income, personal spending, those aren't orange or red right now. It's possible that they could change sometime next week, but we'll also be looking at those because, again, personal income, that's going to show us part of what NFP shows us with personal income and what people actually bring in. And then spending, we want to see what and how people are spending their money. So that's that. Definitely, it's the weekend. Pay attention to your cryptos. Pay attention to your trading journal, your trading plan. Make sure that you're following that, you're executing that. If you're still in your demo account, look at your trades over the past week and compare that to your trading plan and your trading journal. Just make sure that everything you're doing is lining up, because you don't want to be trading on emotion going through the week. You don't want to be trading and not have a clear sense of when to get in and out of the market. So there's a lot of sentiment in the market right now. There are days where you're going to have news that comes out and people are automatically going to get fearful or going to have a streak of greed solely based off of news, solely based off of something that they hear. And so that's why it's really, really important to have it written on paper when you're going to get in and when you're going to get out of a trade, and make sure that you get out. Like, don't look at a trade and think it could possibly go higher, because you never know when breaking news is going to come out. There are a lot of bills and laws that are trying to be passed right now in Congress. Don't get caught up in the market and one of those breaking news stories comes out that something got passed and it flips news, or it flips the fundamentals, which it could do, or it flips your technicals, which it could do, because when anything like that happens, it's sentiment. People are purely trading on emotion at that point in time, because they either start getting worried or they start getting some sense of greed about what could possibly happen. So just make sure for every trade that you're in, you have a stop loss, you have a take profit, and that's what's going to protect you against breaking news, just in case the market does decide to do something weird. And I'm done. I'm gonna go ahead and turn it over to Mr. Levels. The analysis that I was giving you guys for unemployment claims, let me go back to the participants. Everybody who's in here, I will personally send it to you. So anyway, I'm gonna take a picture of everybody in the list, and then I'll send it to you on Telegram so that you guys can have it, because you guys were in class. So thank you for listening, and I'll go ahead and turn it over to Mr. Levels so that he can get started with the technical wrap up for the week.
Cool beans. Appreciate that, Carmen. That was a crazy overview. We had a lot of action in the markets this week, a lot of sentiment going on. Cool beans. All right. So, looking at the dollar and looking back at the week, I wanted to see price come down, retest this structure, and push back up. We did get that bearish movement in the beginning of the week.
We don't see nothing.
Oh, I'm sorry. Let me see. I forgot to start sharing, y'all. There we go. So to start the week out with, we did.
Ready to show this accuracy. That's what it
is. So to start the week off with, I wanted to see the dollar start out bearish and give us some bullish momentum off of the structure. We did get the bearish movement to start the week out with, and the dollar did push down into the structure, pushed down into the bottom and came down here and took out these equal lows down here That was a beautiful liquidity grab, as a matter of fact. Um, and then we start to see the dollar push back to the upside today. So starting the week next week, we're gonna see if the market, well, yeah, Sunday, 5 p.m. when the market opens back up, we'll see if the dollar starts to give us the rest of this bullish move that I wanted to see. So we know we had heavy Euro news come out today. That's why I always tell you guys I'm done trading by Tuesday, Wednesday. Definitely out of the market by Wednesday. Corman tell you guys the same thing, and especially we already know the rules when we got red folders coming out for a pair that we trade. We already know we ain't got no business in the market because we don't know which way the market is going to go. So yeah, got the bullish momentum in the beginning of the week, came back up, retested structure, sold off, but then with this move, we see we had this bullish push to the upside to come back and retest this previous high. And then we see the bearish momentum come in with the news today to give us this bearish move that I was looking for earlier in the week, kind of, but not really because I don't predict the markets. I roll with the markets, trade time and price. So we know that the market does what it want to do. So we trade time and price and we stick to the motto and we try to be out of the market, out of the way by Wednesday. So none of this we would even have to worry about because all of that is what we call what? Manipulation. So sentiment, manipulation, everything's working the market right now. The market is, yeah, it's heavy out here in these market streets. But we controlling the court, we controlling the ball. So um we're gonna keep the ball in our court always. Um, Make sure we practicing proper risk management always. And yeah, we're gonna keep it like that. So we see the bullish move. We did get a bearish move out of this. This is a good bearish candle. And then we do see the push up to take out previous high. And then we see markets start to sell off um, today for a New York session. So that's cool. Um, Looking at yeah, we got our bearish move out of NZD USD to start the week, came down here, took out these lows here, filled in this imbalance, and then start to push up, gave us a play off of structure, but y'all know we out of the market by Wednesday, Thursday, and Friday, so none of this really matter. It's just there for historical data right now. Looking at silver, yeah, this kind of just came consolidated. Market came up to where I wanted it to, a little bit over, didn't swing back above this previous high though, and so we do get this bearish move that I wanted to see out of the market today. So should have been out of the market, but gold, I don't like what gold doing. Gold just doing what it want to do. So I ain't really worried about gold right now. Oil is doing the whoopity doo. Came down here to fill in this imbalance. Now we see the bullish run. on this previous high. Now let's see if we can start to see price come up, take out these previous highs, come up here to retest this high. Y'all know that I got my eyes on $75 oil on up to $100 oil, so just keep that in mind. Along with the fundamentals that Corman has already given us behind oil, so 75 to 100. Looking at last but not least, U30, my baby. We did get the bearish move down to the structure as I wanted to see. Retest, respect, and then we did see Wednesday night. I told you guys I wanted to see if price was gonna come back up here into this imbalance in this structure right here, and it did. That was beautiful. And so I didn't trade this because I was out on this move, but this is what I wanted to see play out for U30, and that's what we've seen play out. So that's a beautiful thing. So when markets open up, we'll see how price action open, and we'll take it from there. So at this time, I'm sorry I ain't let her in.